The Japanese yen has been the strongest performer among major currencies this week, rising nearly 3% against the US dollar and hitting a one-week high of 150.75. So what's driving the yen's strength? Is it good news or bad news? Let's find out. While the ruling LDP-Komeito coalition lost its majority, it still emerged as the biggest bloc in parliament with 63 seats. This result, though, heightened political uncertainty, which initially drove the yen down to a low of 151.50. He believes that the LDP is unlikely to make drastic changes to Japan's fiscal policies. He may be forced to step down, though, if the LDP loses its majority in the lower house election, which must be held by October next year. However, without a clear path to forming a new government, it is unlikely that the yen will sustain its current momentum. Investors will likely remain cautious until Japanese markets reopen after the Marine Day public holiday on July, which will provide a clearer picture for the yen's future direction. If that happens, there is a chance that the LDP will choose someone like Sanae Takichi. She is a former LDP Secretary General, known for her hawkish stance on monetary policy and her support for a slower pace for Bank of Japan rate hikes. Sanae Takichi's potential rise to power is seen as a risk for the yen. According to Turner, the most likely scenario is that the LDP doubles down on its fiscal strategy. However, the currency has since rebounded, as investors seem to have digested the election results. Well, the initial trigger for the yen's rise came after Sunday's upper house election in Japan. So what's the market's reaction telling us? Well, it suggests that the opposition parties, even if united, still fall short as a viable alternative to the LDP. And that's because these parties remain fragmented and lack a clear common platform. For example, the Constitutional Democratic Party won the most seats among the opposition parties with 20. But this victory is still far from translating into real power. Because the party lacks a united front on key issues and is still seen. Even the second largest opposition party, the Liberal Party, has distanced itself from the Constitutional Democrats, making it unlikely that they can unite to form a strong political force. As a result, the market seems unconcerned about the opposition parties' ability to push through radical policies that could significantly impact Japan's fiscal strategy. Instead, the focus remains on the LDP's potential shift towards a more expansionary fiscal approach. And this concern is driving the yen's strength. In fact, ING's head of markets, Chris Turner, suggests that while the yen may see a brief spike to the 151-150 range, overall, the market is exaggerating the currency's strength. Adding to the confusion, Prime Minister Shigeru Ishiba has vowed to stay in power and work on a trade deal with the US despite the election results. In conclusion, the recent yen rally is primarily a market reaction to the LDP's victory in Sunday's upper house election. Thank you for watching and see you in the next video.